Good morning, everyone. Nick Inman from VolumeProfileTrader.com on Monday morning, July 30th. And just to recap what has happened, we've seen a breakout from, and really this, we've seen a breakout from this range. We really continue to print higher highs, higher lows, and that's good from the buying standpoint. But what I'm really looking at is this high volume area here. Let me get the right tool. But from 1372 on the upside, which has been resistance, 1372 or so, and the downside of what was 1300, but even looking at 1337 or so, if you want to catch these swing lows, then you would be looking at some of these volume bars here. So I guess the best way to do it would be to keep it at 1300 or so, 1305, close enough. And you can see that price did a fairly good job of staying in this bracket. And we had two higher lows in here, and it happened to be off of last month's, I'm going to zoom in so you can see, last month's high volume area. Almost the point of control, but this is a little bit, it's not as accurate as an hourly chart, so let's show that. Okay, hourly chart shows it a little bit better. Price came down twice to this high volume area here, and we bounced off of it. I remember catching this entire move to the upside, and I kind of dropped the ball on this one. However, I did say on, this was Thursday, as long as the market stays and holds 1348 to 1350, which was this huge high volume area, you want to remain, you don't want to short the market. And sure enough it did, and we saw follow through, so you should have had a pretty decent gains. I have to be honest, I didn't catch as much as I wanted to of this move in terms of profits, but I'm on the right side of the trade. I just didn't I didn't get prices where I should have when the market bottomed here, but close enough, got it on the second day, and sometimes that's all you can do. So can't really complain. Solid breakout. So now we have to look at potential targets. It looks like April's point of control, 1382.75, let's call it. Price is having a little bit of trouble there. Currently trading at 1379.25. That's also the gap from, I think, which was a jobs report number from a while ago. From I guess it would be April's payroll numbers that occurred at the beginning of May. It's also a gap right there. The gap fills 1387 or so, and then from there, I'm going to zoom in so we can see a little better. Alright, from there, you're looking at this high volume area from 1398.75 or so to down to 1392. So let's say 1392 to 1397. That's a, or I'm sorry, 1399. That's a pretty decent, size range. So once it gets up into there, maybe scale down on some profits. Right here, right now, maybe not a bad place to scale out of. However, looking at the daily chart, this thing looks like, here's the base it built, excuse me. We had a great rally from the end of last year into the beginning of this year, and then let's say the rally ended in April. We basically had a 4-month balancing period in the markets, and that's sufficient time to see some type of continuation of the trend, some type of vertical move that lasts more than a couple of days. So that's what we want to see. We want to see something like this breakout we saw here. We just have to wait and see. However, I think you can use this point of control, 1363 to 1367, as some type of reference point. If price gets down there and starts moving off of those levels, I think you can buy with a stop under those levels. You also want to pay attention to the point of control, or I should say this huge high volume area from July, sorry, excuse me. And you want to see, if price does revert back to those levels, then you'd be looking for an opportunity off of those levels. However, I do think that we're going to see a little more range extension here. So be prepared for it. Only down 3 points after, basically a monster vertical move from Wednesday, say 320 to 385. That's a heck of a move in 3 days, 4 days, and just be aware of what's going on and the potential for a breakout. I would be less concerned about these gaps. We can always fill them, a month from now. It's not that big of a deal. If the market wants to follow through another 20 points and hit 1400, let it do that. Enjoy the ride and just trail your stop. If you just want to use the ATR, the average true range stop, here you go right here. Your stop is now at 1360. So if you were buying on this day, you're in profit zone now, and that's what it's about. So basically, pretty good trading, pretty predictable, and now we just see how far the market can take it. A name like Apple, bouncing off last month's point of control, bouncing off of the 90-day point of control. I missed this trade. I do have a little bit of Apple. I did not add to it down at these lows. I really, not that I thought that their earnings it was a disappointment, but their guidance was a little troublesome, and I do think this is, a rally that it's hard for me to say this, but a rally that you may want to sell into, not to short, but just to scale out of some of your long, because I just, maybe it's not one of those names that you want to be as much overweight as you have been in the past. Just to show the NASDAQ didn't quite break out, but this is the idea, and this is why volume profile is so great. You can see where the majority of the volume was, and I'll zoom out, sorry, for the last 90 days. So call it 1250 down to 2550 down to 2525 or so, and look at where really every time price got down there to 2525 to 2550, price did a great job at giving you an opportunity, mostly to the long side, but especially in the past month, it was a great opportunity both times, and you're paid for taking that risk. And just to show the Dow broke out, so that's good news. I won't go into detail there. You can kind of see the same picture. What I really want to show is the euro. Here we are, the euro, huge gap on Friday. Basically, I'm looking at this high volume area here. If we hold it and euro starts moving higher, not that I think that you should be necessarily a buyer, but it should be good for the overall S&P. Here's price right now, so we're right at the border. If we start to close that gap, then I would be looking to sell S&P, take profits in S&P into strength, and if the short opportunities come, take them, but don't force it. And the dollar, this looks like a sell into strength, to be honest. Up into 83.40 or so. Maybe look to, I don't necessarily want to say short it, scale out of any type of longs. Basically, any exposure you have to the dollar maybe should come back to market weight, something like that. But right now, you're bouncing effectively off of last month's high volume area. It overshot a little bit to the downside. But here we are trading in this high volume area. If we can't get above 83, which I think we will, then maybe you look to scale out even more. But it all comes down to Is this a breakout on the S&P, or is this some type of fake out? Maybe we're only trading to the top end of this range, call it 1400, and trading back down to 1340. I don't know. But what I do know is you can use those monthly levels as reference to get long or short, especially in range-bound markets, and use it to your advantage, and you'll find out that even in a whipsaw market where it's pretty tough to judge the moves, the swings, if you're just staying involved at those high volume areas, you'll find out that you'll get paid for taking on that risk, whether it's long or short. Now, once we develop a trend, let's say it's a trend to the upside, then you're going to want to scale down on those shorts, and you're going to only want to be net long until we see some type of weakness or some type of vulnerability in the market that shows you that you should be more hesitant to the long side, and you should be looking to initiate some shorts and scale out of some of those longs, become more market neutral, maybe even short the market. So anyways, take care, have a good trading day, and I'll talk to you tomorrow.